Well, folks, here today, I just bought 5 stocks and I put a whole lot of money in the market here today, deployed a lot of money. I mean, if you guys know, you know the market's been rough, right? Small caps have been getting destroyed and I just can't sit on my hands. I really want to build cash. I really do, but it's just, I can't look at some of these stocks at some of these prices and based upon where I think a lot of these stock prices are going over the next 3 years, over the next 5 years, there's no way I can just like sit on my hands and be like, I'm not buying. Like, it's impossible, okay? Now, fun experiment. Let's do this, okay? Before we get into these 5 stocks in this video, comment what 5 stocks you think I bought here today. Now, no one cheat, okay? Don't watch the whole video and then post a comment. Oh, these are 5 stocks. Like, I would love to see you guys guess, and we can see who's right. Obviously, a lot of you guys watch my channel, and I appreciate you guys. Much love as always. Thanks for joining me. But I know some of you guys might know a few of these stocks. So, and also, let me know if you guys are buying any stocks actively right now. You know, there's a lot of stocks that I feel like are steal deals. If you're any bit of long-term investor, there's always worries about short-term. What's the Fed gonna do? Could we drop more? Blah, blah, blah. That's all a bunch of BS. You know, that's drama. There's always going to be market drama out there. And at the end of the day, if I see certain stocks trading at what I feel silly prices, I'm going to pick up silly amounts of shares. So yeah, I hope you guys enjoy this. As always, before we get into these 5 stocks here, I got a link down in the description area for you guys. Might have it as pinned comment, but it's for sure in the description. If you're looking to get some free stocks from Moomoo, up and coming stock brokerage, they actually have a pretty sick app too, by the way. Go ahead and check out. I got a link down there for some free stocks. Also, make sure you're subscribed to this channel. If you're not, this is Financial Education 3, the small channel. So if you're not subscribed yet, go ahead and do so. And the Hungry Bowl, we got a big update coming over the next couple of weeks on a different look for the Hungry Bowl and a lot of different things. So if you haven't downloaded the Hungry Bowl yet, do so before the look changes. Really, really excited. You can listen to earnings calls right inside the app, plus do so much other types of research, track all your stocks, add all your stocks to your watch list and whatnot. Keep up with breaking news in the market. The Hungry Bowl is very hungry, all right? Alrighty, guys, so let's get into this. Let's get into these 5 stocks. And some of these stocks I bought in multiple accounts, so I'm going to show you screenshots of that as well, okay? Honest Company, HNST. This one, I can't not buy Honest at $7.29 a share or $7.25 a share. You know, it's just like, this is one of those stocks under $10 is easy money, in my opinion, for anybody that is a long-term share, you know, like a long-term investor. Easy money. And, you know, at $7, it's just ridiculous. You know, that's all I have to say. It's just ridiculous. And for a business that I'm 0% scared of, as far as their future over the next 3-5 years, and including 2022, they're going to put up together a beautiful year of numbers, in my opinion, this year in 2022. The comps are so easy. They're going to be beating numbers left and right. They're going to be posting, you know, incredible revenue numbers, especially for this sort of business model, which is not an exciting growth category usually. Honest is going to continue to steal market share from the big established companies. They do a phenomenal job. And yeah, I went ahead and bought 3,000 shares of HNST. You know, long term, I think this is a $20, $30 stock. And when I say long term, I'm not talking like 10 years from now. I'm talking like, you know, within the next 3 years, I think this is a $20 to $30 stock. So yeah, picking up shares at $7. You know, give me as many as you can possibly give me. I love that one. I love the balance sheet. I love the income statement, what's going to transpire there over the coming years, and going to profitability over the next few years as well, okay? Next one, this is a really big buy for me here. SDC, Smile Direct Club. Yeah, I wasn't playing when it came to Smile Direct Club here today. Bought 11,111 shares of Smile Direct Club SDC 215. This is the most dangerous stock of the stocks I bought here today in terms of, like, you know, risk reward, I guess you can say. You know, this is one of those stocks, as long as there's 2 core things Smile Direct Club has to do in 2022. And this stock will be a $5, $10 stock by the end of this year, as long as they do these 2 things, okay? One is they got to get the revenues trending back in the right way and get everybody confident that the revenue growth story for Smile Direct Club is intact, which I believe it is going to be intact, okay? That's the first thing you have to do in 22. The second thing this company has to do in 2022 to see a $5, $10 stock price by the end of 2022 is they got to get the cash flow situation right, meaning they've been bleeding money out of this company in 21. They've got to start to improve that in a major way as the quarters tick on throughout 2022. If they do that, along with, you know, the revenue growth story, the stock will respond. It will come back to $5, $10 stock over the next year. And if they need to raise any money at that time, they could raise money. I'm not sure they'll have to. It really depends upon how healthy they can get the cash flows. But based upon the numbers I've run for this company, I think they're going to be in a really, really good spot, not just in 22, but over the next few years. The risk with this one is if they couldn't fix their cash flow situation, and this ended up being a stock that just, they just kept bleeding money, and next thing you know, they're bankruptcy because they couldn't, raise any money, they couldn't get any loans from banks, anything like that. So it always comes that sort of risk in a stock like this. I'm willing to take that risk. I'm not risking the farm when it comes to Smile Direct Club. I think, most of you guys know roughly how much I have in the market, and roughly how much I have in Smile Direct Club is a very small portion of the money I have invested in the market, right? But at the end of the day, I think the reward opportunity is going to be pretty intense here for Smile Direct Club. So, time will tell with that one. Like I said, that's the biggest risk reward stock I'm buying right now, flat out. And, there's just not many stocks I'm buying that I'm like, yeah, I could see that stock, 3Xing, 4Xing, 5Xing over the next year. Not that many stocks. There's a lot of stocks I hold that I'm like, I could see that going up 50% over the next year, or maybe even 100%, but several 100%? Nah, there's not many stocks I hold that have that sort of potential. Okay, but when you're being priced for bankruptcy and you don't go bankrupt, your stock price responds pretty darn good, especially if you got a revenue growth story. Next one up here, Oatly, Otly. Oatly is a very disruptive company in the let's call it the milk market, okay? And when it comes to Oatly, is a stock that's been trading anywhere from $7, $8. It just started picking up some shares recently. I picked up 1,000 shares. I think it was a little under 8 recently, about a week or two ago. Picked up another 1,000 shares here. Had to actually average up on my position with Oatly. This is a company that, my gosh, if you want to talk about a recurring revenue business, Oatly is the one. When you think about folks that drink milk, right? That's like the traditional market. And by the way, milk sales are already starting to decline recently. They're going to decline a lot. And I'm talking about traditional cow milk. That's going to decline in a massive way. People buy a gallon, 2 gallons, 3 gallons. If it's my family, 5 gallons a week. And, you have a lot of folks that are going away from that, and they're going to Oatly, right? Oat milk. And because you get a lot of the same benefits you can get with cow milk, but it's obviously not an animal product. And so you think about the type of revenue opportunity and the recurring revenue stream that a company like Oatly is going to have over time. There is obviously competition in this market. There will continue to be competition in this market. I think that's the risk when it comes to Oatly. And they're expanding way past just oat milk, although that's the crazy big opportunity. They're also getting into ice cream products and other frozen products as well, yogurt. They want to get into more of the cheese market and other products as well. So when I look at Oatly, I see another one of those food giants in front, in terms of where this company's going. They should do around $1 billion roughly of revenue in 2022. Maybe they do a little bigger. They already got a huge factory in China now that just opened up very recently. They got another huge facility in Utah that just opened up very recently. They have facilities in Europe. And so there's a company that I look at, and they're just in internet. They're going to become an international food giant. And when you start pushing $1 billion like they should in 22, you start to be respected as that, right? And the crazy thing is the revenue growth for this company is like you're not even going to find it out there. I mean, the revenue growth is even stronger than my beloved TTCF, which is crazy. And, to be where this company's going, I mean, it's tremendous. And the products are going to be profit margin beasts over the coming years. So Oatly, love that one. Had to pick up 1,000 shares here today. Obviously, I'm huge on the plant-based food market. Anybody that watches my videos, you guys know, I just think this is a game-changing category that over the next 3, 5, 10 years, we're going to see just kind of, boom. Let's just put it that way. I mean, it's already booming. You look at the numbers, but I think it's the thing is the percentages look big, but not the amount of people look big yet. Wait to see what happens over the next 3, 5, 10 years. Okay. And so super bullish on that. The Chef, had to buy some Chef here today. Bought 778 shares of Tattooed Chef here today at $14.40. Obviously, you know how bullish I am on the Chef, and that's just one I'm going to continue to buy as long as it's anywhere close to this range. This is way under my cost basis on this stock. Most of the shares I bought for the stock, or at least the average shares I bought for the stock, are probably in the $16 to $18 range. So if I can get shares at 14, I'm going to go ahead and do that, right? And Tattooed Chef, I think, is going to have an incredible 22 with a lot of big product launches. launches, and I think the excitement's going to come back in that, baby. Honest, HNST, we already covered this one, but I bought more shares in another account, another 1,777 shares. I'm building my position of Honest much faster than other stocks, just for the mere fact that when it comes to Honest, this is one I want to build as fast as possible, and it's been a smaller position for me, so I'm looking to add aggressively, versus a Chef is kind of already a built-out position, so it's kind of just like extra cherries at this point. With Honest, it's like I'm trying to add aggressively to get my position fully built out. I'm getting close. I think by the end of January, I'll probably have my Honest position completely built out, and when I say completely built out, it doesn't mean I'm done buying the stock forever. It just is at that point where I'm like I could buy more shares if it goes down more, but if it starts going up, like I'm good. Like I hold enough shares, okay? That's where I'm trying to get to with Honest. In another one of my accounts, I bought another 222 shares of Tattooed Chef here today. That one at $14.39 there for the Chef. I bought some Avant Brands here today, AVTBF. This one is actually less risky than Smile Direct Club, even though it's a super tiny company, a 24-cent stock. But it's actually less risky if you look at the balance sheet and you look at the income statement. They're actually in a much healthier position than Smile Direct Club. Problem with Avant, as far as the stock price goes, is it has trouble getting any traction because it's a 24-cent stock. So this isn't even one most folks on Wall Street could consider, and most funds. So it kind of, they just have to keep growing numbers to hopefully, get more attention in the retail market. And then if they do that, then they should be able to get some attention from Wall Street, right? It's just, when you're that small of a company, it's hard. I'm approaching a little under 1 million shares of Avant Brands, and it's very possible I could go over 1 million shares owned of Avant Brands, which is, it's not a crazy dollar amount, but it is like kind of epic just to think like, wow, I could potentially have 1 million shares of stock. I've definitely never, from what I remember, I don't ever remember owning 1 million shares of any stock, so that would be cool. It's definitely a possibility. And then there's another stock I just put $125,000 into very recently. If you want to check that out, check out the video I posted on financial education today. Much love as always, guys. Hope you enjoyed this video. Don't forget about the free stocks from Moomoo. Subscribe to the channel and download the Hungry Bowl on your iOS and Android store. And also thank you to everybody that ever leaves a review for the Hungry Bowl. That means the world to me and the entire team that work our butts off to make that the best free product we possibly can. Thanks for watching and have a great day.